Hello there, this is a mic test for the current stream. So guys, while I'm testing the mic and setting up the screen and everything, if you guys are in the audience and you can hear me, I will appreciate a heads up here in the comment section. Hello, Madhavji, good evening. How's the audio there? Able to hear me clearly? Hello. Okay, looks like TradingView feed is working. And let me open an incognito to check on YouTube as well. Okay, thank you for the confirmation there, Madhavji. Let's, in that case, begin this webinar here. So before any further ado, let's first get done with the legalities. So as you can see here on screen, there's a disclaimer suggesting all content presented here is for educational purposes. I'm not soliciting buy or sell. If you do want to use those views presented in this webinar for your trading, investing, or for any other purpose, you yourselves will be liable for your loss of profit, etc. You can read the whole thing here. So that's about it for the legalities disclaimer. So let me give you a quick introduction. My name is Nirav Yadav. I'm the founder of the YouTube channel 50 Eyes Market Analysis, where I present my market views and have been doing this for many years. This is the website here, as you can see on screen. I also run a YouTube channel with the name 50 Eyes Market Analysis, YouTube handle at the rate of 50 Eyes, where this live webinar is also broadcasted alongside Trading View, and you can check it over here in live section by going to the YouTube channel. Other than the YouTube channel and the website, I'm also the author of the book called Think with the Market: Secrets to Achieve 80% plus accuracy using Elliott waves, right? And one more important thing before I would proceed any further is that for all the years, 7+ years that I've been publishing my work publicly, I have kept a track record, and you can see the accuracy of my work is 2016 80% plus 83 something, 2017 87 something, and so on and so forth. 2018 84.6%, 2019 84.88%, 88% for 2020, and 2021 82.22%. You can what was suggested in the video link and what happened. So this way I have compiled these spreadsheets, and we calculate the accuracy for everything that works. We give it a +1. For things that don't work, we give them a -1. And so far our accuracy has stayed above all industry standards. As you know, in trading even 60% accuracy is considered very high. So that's about it for my quick introduction here, right? And if I have not already mentioned, my name is Nirav Yadav, and the way we do analysis is using Elliott wave, which is my area of expertise. So let's proceed with the webinar here. So in this webinar, what we will do is we will go over the routine charts that we follow. And by the way, if you are new to this webinar, let me just quickly let you know that we conduct this webinar every weekday. Sorry, not every weekday, on Monday, Wednesday, and Friday of every week. And the timing always remains the same. It is 2 PM GMT. So at 2 PM GMT, you can join us live either on TradingView or YouTube, whichever platform you prefer, right? and we will cover the charts of EURUSD, followed by EURCAD, USDJPY, EURJPY, crude oil, gold, S&P, Nifty, and BTC, Bitcoin. So these are the charts we will follow, right? And that's about it. Let's now just quickly head over to the chart of, let me push it below. Let's first head over to the chart of EURUSD, which you can see here on screen now, right? Yep, I think it is visible. This is the chart we are following. So if you are following me from the past few webinars, then you will know that on EURUSD we have always had the strategy of going long. Even in the last webinar, which was conducted on 12th December 2022, we had the idea that EURUSD will be a swing long kind of setup. That's our that was our take on this chart, right? So thus far, what I see, by the way, let me just reload this chart. I had done some update to the counts, and sometimes trading will require a restart, or what do you call refresh, not restart. Okay, so yeah, this is the chart of EURUSD that we are following, right? In the last webinar, which was conducted on 12th December, the market was trading around, let's see, 19, somewhere here. So when we were doing the webinar, the market was somewhere here, and the idea was that either it will go straight up or it will go sideways for a little bit within this range, and then it will go up. So what happened really was it just went straight up. So in that sense, our analysis has worked out, right? As we were long from a swing perspective, the idea was to add 1/3 longs at the current level, followed by remaining longs to be added when the market corrects, or if the market corrects. So partial positions would have been taken according to that analysis, if you are following me. Let's see what the count is, or if there's an update which is required on this count. So the count pretty much holds. There is no new update which is required on this one. And the count which we are following thus far is a triple zigzag correction in Elliott terminologies, which means there's a W here, an X here, a Y here, followed by an X here, and a Z here. So that's the count we were following. So if I were to explain this count on the rough right hand side, for those of you who are new to this way of analysis, first leg up is called a W. It moves up in 3 waves. This is the first wave up, second wave down, third wave up, or they are also called A up, B down, and C up. No need to get into all that terminologies. Next leg that moves up is called Y, something like this. And the next leg is called a Z, something like this again. And all three are connected by a connecting wave X. Connecting wave X. So that's the way we do these analysis, and this is the pattern we are currently following. So in this pattern, if we go at this point, which will be our point of reference for this analysis, around the price level of 1.029, we seem to be having a A up, B down, and C up formation. So that could be the A up here, the B down as a possible triangle here, and then this looks to be the possible C up. So based on that analysis, the upside, we can remain long as we remain above this trend line, right? So this is the zigzag formation for the wave Z up. That's my take on this for right now, for the current situation. If it goes much further than the wave A high, because generally in a zigzag formation, A and C tend to have equality. Of course, it's a guideline, not a rule. So in that case, we can have a projected target for wave C, roughly speaking, around the level of 1.069, and the second target will be 1.0810. So these will be our projected targets. Let me quickly draw them out here. So these two will be what we will consider as our targets for the current trend, or for this current trend, right? So let me draw them over here on the rough area as well, so that we can remove all the counts and everything from screen. So that's it for our analysis. And by the way, this last leg up, we seem to be having a wave B as a triangle, as you can see with this trend line and this trend line. So based on that, we will draw the channel for this zigzag, and this will be the starting point of the channel. This will be the second point of the channel, and this will be the trend line followed by the parallel here. So basically the strategy remains, if you were able to take entries into the longs based on the analysis we discussed last time, then you can hold on based on your entry, trail the what you call stop losses accordingly as per your entry, obviously. And once this market really takes out this low or the downside of this channel or the lower trend line of this channel, then we will be looking for possible selling opportunities on this counter. I think that's about it for Euro USD. I don't have anything to add here. If you have any doubts, please post them in the comment section, or not, then type in clear. We will move forward with the next chart, EURCAD. Okay, so right here on screen we have the chart of EURCAD, and on this particular chart, really no update is required currently because it is just following the same progression that we discussed in the last webinar of 12th December. So currently what we seem to be having is a zigzag in play, and the zigzag currently is in the wave C, and as I pointed out so many times, we don't really care for adding any shorts until the market really closes below this green channel line or the lower trend line of this green channel, right? So I have as such alerts placed on this, as you can see over here, for exiting channel, and once these are triggered, I will be interested in having another look at this chart and seeing if we can enter shorts on this counter or not. So that's my quick take on what do you call EURCAD here, right? And I would not add much here. Simple and more or less the same as before. Just will wait for a few more seconds. If you have any doubts, you can post here. Otherwise, we move to the more what do you call noteworthy or more activity one, USDJPY, which has seen some big move. So let me just quickly check if there is any comments on YouTube. Seems to be having an issue loading up. Okay, so we seem to be doing well here. Everybody seems to be on the same page. So let's just quickly load up the chart of USDJPY. So yeah, there we have on screen the chart of USDJPY, and the current analysis that we were following is that we have a zigzag in the upward direction, which we had labeled as a possible A or 1. Followed by the correction. We were having two scenarios when we discussed this chart the last time, which was that either the BR2 is complete here or it is continuing to the downside. Obviously, if this count is being followed, then BR2 is the one which is on the downside. So in Elliott Wave terminologies, this scenario will be, let me remove that. This scenario will be looked at something like this. Let me draw it in the rough area. A up, B down, and then there should be a C up. That's generally what we would expect in this particular case. So that means we are still waiting for the wave C up or in the other direction. However, there's a small problem here that first of all, this B wave has gone too deep. It's not like it cannot go this deep. It can go to 99% of the wave A, and currently it has only gone a little bit below 61.8%, as you can see. So it's not even touching 90 so far, but that means we need to be a little bit cautious here, because going this deep or anything lower than 61.8, I generally tend to remain a bit cautious, and based on that, I will be looking for longs after a little bit. That means I will wait for the price action to clarify something or show some strong movement, and only then I'll be interested in going long on this counter. Because the other scenario would mean that, let me remove everything. The counter scenario or the downside count would suggest that this market may have completed an A up, B down, and C up, and it may be progressing in a downward direction. Because remember, A up, B down, and C up, the C has to just go higher than the A. So it has already gone higher than the A, as you can see over here. If I draw a line here, this C has already gone higher than the A. So that would mean that we have a counter scenario which is currently playing out, which may be currently playing out. So based on that, we need to remain a bit cautious on the long side here and wait and watch on this market for any longs right now. So that's the scenario for longs. Second scenario, which I just said, that if this is a A up, B down, and C up, then we currently don't want to enter shorts. We will wait for this market to break the low. Break the low means make the last low, which is the level of roughly speaking 133.62. So below this low, that will be a technical short, or the counts will have to be completely redone from the top. So that's why I have an alert placed a little bit above it. That's my take on USDJPY. Upside, wait and watch. Downside, near the low, we'll be interested. Nothing more to add on this chart. If you have any doubts, I'll just watch out in the comment section. If not, then we can just move on to the next chart. So USDJPY, next chart will be EURJPY. So as you can see here on screen, EURJPY chart. Let me just clear all this stuff. And let me just quickly check one more thing here. I have actually multiple of these charts open, so let me refresh them. Thank you for the feedback over there on TradingView, Madhurji, and Dinch has a comment here. I have used TJPY 134.655 technical short. 134.655. So that means you have entered shorts at 134.655. I currently don't have confirmation for it, but if we look at EURJPY, which is the next chart we are discussing, things seem to be a little bit suggestive that short side can be the one this market is following. Let me go on a higher time frame. But then again, as I said, there is no confirmation. I had updated it. Some problem with TradingView because I had updated this chart, but they are not showing the updated counts. So let's just refresh and see. Okay, so they still are not showing me the updated count, so I'll just redo the things. So on this counter, there are multiple views possible, but for now we are taking the one which is a little bit bearish in nature. And as I said, I had some detailed counts, but they seem to have gotten removed, or maybe I didn't save them at all. Anyways, they go something like this. On EURJPY, this is the updated view I have. It is suggesting that maybe this was an A up, B down, and C up, and it seems to be fitting the counts. It's like perfectly fitting the counts, at least for now on this 15 minutes chart, right? So what does that mean for EURJPY? That basically means that if this is an A up, B down, and C up, then there should be a 3-leg down movement which will follow, at least 3 leg, could be 5. If it's a 5, then it will go lower than the last low, right? So we don't have confirmation for shorts. But if it's a 3, even then we expect some more downside movement and it can go lower than the B low, which is around 143.20. So based on that, some more bearishness can be expected on this counter, right? And the other view which we had of bullishness, again, we don't have confirmation for the bullish move right now, right? This leg, we were able to catch it. If you are following me in the last 2-3 webinars, we had setups which allowed us to catch some part of this leg up or this C wave up basically. But after that, I was not able to catch this because I was busy with some other trades, and also this was like multiple markets moved very fast. S&P moved strongly up, and EURJPY moved strongly down. So multiple movements, couldn't catch every single one of them. So long story short, more downside can be seen or should be seen as per what I'm seeing on this chart right now, right? How much downside? There is no real confirmation. I'm not interested in targets because the counts here are not very clean. There are few possibilities. First, this is possibly a leading diagonal, which would mean that whenever this down leg is complete, it will again see 3 waves up. If it's a leading diagonal, then this A, B, C, which we just saw labeled, would be the wave 1 of a higher degree, and this leg down will complete the 2 of a higher degree, followed by 3 of a higher degree, 4, and then 5. So that's one of the possibilities. And as I said, if it's going down, then we don't have the downside confirmation. So that's one of the possibilities, right? So right now, because we don't have confirmation, I'll like to go along with the diagonal formation count here. So that basically means I'm not interested in selling this market until I'm proven wrong, right? So that also means that I'll wait basically for this wave 2 to complete, this market to go a little bit lower, and then this price action, which will happen over in this region, that will be the one which I'll look at and analyze to decide if I should go long now. So basically, EURJPY is a wait and watch, right? And intraday wise, I might look for some sell off, but swing trading wise, I will wait for the sell off to complete and then look for some buying opportunities over here, right? And if you want to be really, what do you call, blunt about it, you can just place an alert over here at 144.158. Once the market goes above it, then you can just reanalyze, because generally that will be the point after which the confirmation most likely will come. That's about it for what do you call, EURJPY. Let me see if I have some comments. If you can confirm, I see strong support on EURJPY on 4350 thereabouts. There is nothing confirmed there. I think we EURJPY. Let me see. There is strong support within this region. Let me quickly point that out. There's extremely strong support here. Basically, support here means congestion. Congestion means sideways price activity. Sideways price activity basically means something you can put into a box. So if you look inside this box, you have this here, this here, this here, this here, this here. There's a lot of price action here, which is suggestive that this should act as a support zone, right? And this also means that we can further theorize that maybe this down leg will complete somewhere within this range, right? But yeah, but that's not much of a help here. As I said, I'm still not interested in going longs. Maybe we can analyze it again if it reaches this level or the lower level of the support zone, which is coming around the level of 143.16 or 143.10. So somewhere in this range, 144.578 or 58. So somewhere within this range, we seem to be having a support region. When it's time frame, Rao Mansoor is saying gold. Yeah, of course, we'll cover gold, Rao. It will be next to next chart. Next chart will be crude, and then we will have gold. So 1S time frame, Dinchi, I have already covered this EURJPY chart in very huge detail on 4S time frame, 1S time frame, etc. Just check 2-3 webinars back. right? There's a very detailed analysis of it, and probably I should take some clips out of these long webinars and push them as videos, at least for the detailed analysis parts. So I'll just suggest you check 7th or 6th webinar, something. I must have covered it in great detail over there, or maybe 5th. But all the timestamps will be posted on YouTube as well as TradingView. So you don't have any problem. You just go to the website here, my website here, right? And let me show you actually how to do it. So if you go to my website, at the bottom you will find that there is the link for the 11th, 10th, 9th, 8th, and you can just scroll for 7th, 6th, 5th, etc. webinars. Once you click on any of the links, the timestamps are posted here. So you can just check it in that sense. It's not much hard. So otherwise we'll cover it after 3-4 webinars again. Yes, I will check. Good. So before we move to the next chart, which will be the chart of crude oil, if you guys are watching it on YouTube, hit the like button, right? I don't see many likes thus far, right? If you are watching on TradingView, the like button is called rocket button over there, and kindly hit it so that other people who watch it afterwards will know that the content was useful, and it will help the TradingView as well as YouTube algorithm know that this content is good. So definitely hit that button, and after the webinar is over, share the links in at least 3 of your trading circles. If you have WhatsApp groups or Telegram groups or Discord channels, whatever you have, just share it there, or just on your social media like Twitter, Facebook, etc. So let's now head over to the chart of crude. So on this chart of crude oil, if you are following me for the last few webinars, you know that from this point we have a flat correction in progression is what our take is, and we are expecting this to be the B wave, and then this leg up is what we assume to be the C wave. So here is my updated take on this chart. I think that this might be the count this market is following. So in that case, I'm expecting this market will reach somewhere within this range. Let me draw it. Somewhere within this range, I expect this market to go up. And let me just quickly tell you what this count is on a rough chart. So if you follow this boxed region, so here is what we think this pattern is. 3 waves up for wave A, 3 waves down for wave B, and then what we have is 5 waves up for wave C. So in that sense, what we are basically waiting for is the 5 waves up for the wave C is what we are waiting for. Now, if the 5 waves up for wave C is exactly what's happening here, then after it's complete, we should see a down leg, which should take this market lower than the wave below. Right. So basically, short term wise, this market we are expecting will go higher, right? And we are expecting it to go within the range of 80.30 to 83.41. That's what we expect this market to possibly reverse. So once it goes there, then we will look out for possible reversals. Once we find a reversal or some sign of weakness, then we will look out for possible sell-off. Not right now. Right now it's just theoretical, right? Only thing that I have a bit of confidence over here at this point is that it will continue the up leg. Oh, come on. So I made the wrong alert. So right now what we have confidence over is that it will going to be continuing the up leg for now. So once this up leg is complete, then we will look out for sell-off or the reversal on this market or this counter. So that's our take on WTI's crude oil. Next chart will be of gold. If there is any doubt on crude oil chart, I'll just wait for a few seconds in the comment section. You can just type in. If you are understanding what we are talking about here, just type in clear and we will move on to the next chart. Interesting chart of gold, by the way. Okay, I don't see any doubts here, so let's head over to gold. So in this chart of gold, as you may have already, thank you for the confirmation there, Madhavji. So in this chart of gold, as you may have already, seen, because we discussed it in the last webinar, our analysis was that this market is having one leg up remaining. Basically, we had two analyses and both of them were suggesting at least one leg up was remaining, right? And the leg up remaining was a swing long based on the idea that if this is a A up and this is a B down, then the least likely scenario was that this is going up as a diagonal, right? So a diagonal basically means that, again, I'll just draw it in the rough area. 3 up, 3 down. 3 up is called an A. 3 down, that is A down, B up, and C down is called a B. And the next leg in this case is what we have as a diagonal, which looks like this. So we had already identified this pattern. If you want to check, you can check in the last webinar. We had clearly pointed out that we are expecting one leg up, and now it has exactly happened as we thought it would, right? So first of all, that analysis has played out picture perfect, which was done on 12th December webinar as well as in the previous webinars also. So from this point onward, somewhere here, I think we have identified this pattern. So we were quite forward looking, like 2 weeks ahead in time, we knew about this pattern and we were able to catch it. If any of you guys were able to catch it who are in the current webinar, that will be nice if you can point that in the comment section. And also one more important thing, you need to follow these webinars, like all of them, Monday, Wednesday, Friday, because these patterns sometimes can get complex and they are minute nuances that give rise to multiple trading opportunities. So this isn't the kind of thing you can just watch one day and then forget about it and then come back after 1 week or 3 weeks. You need to watch all of them. And honestly speaking, this is the kind of content people actually subscribe to and pay for in private paid memberships and whatnot. So while it's there, use it and follow it. So that was a kind of on gold. And yeah, one more fun fact. Let me just quickly load something up here. So while I was looking for a thumbnail for this webinar, this 12th webinar, I picked this chart of gold and you can see the thumbnail here right on screen. Let me delete all the drawings. So as you can see on screen, the thumbnail here is when I was picking it up, the market was here and now the market is here. That's one fun fact. This is also like basically it just went up after I took the thumbnail. I wasn't even able to post the trade in the Slack channel. It went up quite fast. Right. So just one fun fact I wanted to point out here. Let's head over to gold now again. And let's go over the other scenarios which should be looked out on this chart. First of all, this hypothesis has played out. So let's look at the other hypothesis. And yeah, one more point to add here. If this hypothesis is the one being followed, then that means gold can see a downward movement from here. Okay. So we will not be, excuse me. So we will not be adding any shorts for now. We will wait for the break of this channel line or this trend line to the downside for that. And as you can see over here on the chart, we already have this yellow trend line. I'll just push an alert on it for less than, and once it's triggered, then I'll look for the possible sell-offs here. Until then, we don't look for it. as it may have some more upside for wave 5 remaining. Okay, so let's look at the other scenario. So other scenario suggesting that this is a wave 1, 2, and this is a wave 1 of a lower degree, dot 1, let's say, and this is a wave 2 of a lower degree, dot 2, let's say, and then this progression is heading up for a dot 3. So this scenario is suggesting that there is extremely strong bullish movement remaining on this counter, right? And I don't have confirmation for it because, as I said, confirmation is only come when the market has already shown some more strength. So right now we will have to take both these possibilities in mind. So one possibility is that soon we will see a downward movement. That was what you call our hypo one. And the another possibility was that or is that we will see strong upward movement for this. So now that you are aware of both of these things, we have also discussed the trade setup. The trade setup for the downward movement will be, we will only be interested after the trend line is broken to the downside, right? And for the upside, we don't have any confirmation yet, but any strong bullish bar, right, which takes out this upside trend line will be suggestive of the fact that wave 3 might be in formation. Remember, the markets can take out the upside trend line and don't mean anything and reverse later on. So that's just a sign that we will look for it. So those are the two main setups on gold we have thus far. Next chart will be of S&P 500. I'll now check the comment section. If you guys have any doubts, just post them in there, or if not, then type in clear before we move to the next chart. Next week for gold. Not sure what that means. Oh, okay. Next week. Obviously, this is what we have already covered. Clears ascending pattern. Yes, you can call it a wedge. That's what a diagonal basically is, but it has more detailed nuances. Like if you call it a diagonal, then it should have 5 waves inside of it. Each wave should have 3 legs in it, and the fourth wave and the first wave will overlap. Whereas a wedge is just a wedge. You can just call anything a wedge which looks like ascending and in the upper direction. When you trade the channel break over this, you can trade whatever you want. But as I said, the channel break will not be a confirmation for short selling. I take it as a signal only. So if you enter the channel break, by the way, in gold there was no channel, it was a trend line. So if you trade the trend line break, then it will be an aggressive setup, and generally you would want to go in with smaller position size in an aggressive setup if you want to go into an aggressive setup. We saw an Indian stock chart. We can look at Maruti later on after I cover Nifty. But as such, I have not prepared anything for the webinar, so I will see if it's worth covering or not. So that was it for gold. And I see that the webinar is extremely delayed on YouTube. So probably the comments for it or the gold setup will come later on as well. But anyways, I'll take them when they come. Let's head over to the chart of S&P 500, an interesting chart actually. I have also updated the analysis of S&P. Let's see. Refresh will load that up. Yep, there it is. So on this chart of S&P 500, as you can see over here on screen, we had this long running count of this market doing something like this. Okay, so this is the count we have thus far in mind. So basically, as you may have seen me repeat so many times, an ABC pattern once again. A leg down, correction for B wave, and then C leg down. So at this point in this market, our interest or our point of interest becomes this B wave. Is it complete? Is it continuing? If it's continuing, how is it continuing? So as you can see on this actual chart, what I think is that this B wave might be continuing as a possible triangle. So if this B wave is a possible triangle, then the triangle will have 5 waves as per Elliott wave terminologies: A wave up, B wave down, C wave up, D wave down, and then E wave up. So that's what we call a triangle. And if the pattern is correct, then we want to see, or we should see, a break below this channel, right? So not really required to even be a channel. We can just push an alert over here below this level of blue line, which is 39.41. So once we see a break below this line, let me remove the line and push an alert there for less than, then I will have a stronger conviction of this market following a triangle formation. Okay, so let me now draw in what really it would mean to be a triangle. So it would basically mean that we will see zigzag movement for D wave down and then zigzag for E wave up, which should then be followed by, as you can already see on this chart, which should then be followed by this C leg down. So that's our take on the S&P's 500 chart. So basically we wait for further information, and that information will come in either with the break of the suggested trend line, as you would have seen when or basically this trend line, this blue one, or CN color, whatever it's called. Or more simplistic analysis is that 39.41, once it's broken to the downside, we become interested in this pattern, relax down as a zigzag. So we will analyze it in accordance with this information. So that's the hypo one, or the main hypothesis for this count, or H1. Second review I have on this is that this C lag might be continuing, right? No analysis or no confirmation for that thus far. If it's continuing, we will have to look into it, and obviously the market will show price action suggestive of that. So nothing really to add here on S&P chart. This is it. If you guys have any doubt, you can just post them in the comment section here. As we move on to the next chart, which is of Nifty 50. Which, by the way, is performing as expected. All right, I see no doubts here, so I'll just head over to the chart of Nifty. So this is our chart of Nifty 50. Let me go on to the 4-hour time frame. So in this chart, you can see that, that's not the one. This is the one we are following. 15 minutes should do. Okay, there it is. There it is. Okay, so in this particular chart, let me see if there's something I'm missing here by going inside the counts. 1, 2, 3, 4, 5 for 3, down for 4, up for 5, or there's an alternate view here that I have to just push on this chart, and that would be that this might have been a corrective leg up, should be of a higher degree. Okay, that's it. All right, so now let's head over to this chart and see what's going on here. So from this point of reference, which is around the high of 18,887, on Nifty, we had a corrective leg down. The corrective leg down was ABC. And keep in mind, we were able to catch this leg down as well. I was even able to point out last to last webinar that this was not over here, which many people were thinking was the case. And next day, the market showed that that was the correct count by opening gap down, as you can see over here. Let me just magnify that. So when the market was here, a lot of people were of the opinion that the corrective structure is over. And my view was that there was no confirmation. And I was not long on this. Actually, I was short. Later on, the market opened gap down. And that's when I suggested in the next webinar that the downward move is most likely over. And if you check the last webinar, I suggested very clearly that I'm looking for longs on this counter. And after our analysis is exactly what's happening. So our analysis was done on 12th December. So 12th December, the market was somewhere here. It closed here. From that day on, as you can see, this market has moved up by 200 something points. Yeah, roughly, not roughly, it's actually quite near to 200 points. And because I was already able to catch this analysis before the market closed while I was doing the webinar, I was able to take the longs here. So pretty big move I was able to catch and pretty decent profits for it as well. Now let's head over and see what's the updated or current view for this market. So first of all, the conservative view or the what do you call clear move is seemingly over. It was only till this wave C. So if you were to look at it, I can look at it as an A up, B down, and C up. This will be the conservative view. And the current count is suggestive that if the C is complete, then this down leg can continue, or this market can continue in the downward direction. That's our take on Nifty, and this will be our hypo 2. There is no confirmation for it yet. And hypo 1 is that the bullish move should continue. If the bullish move is continuing, then our count is suggesting that this is the wave 1, this is the wave 2, and we are currently possibly either inside wave 3 or the wave 3 is complete, right? In both those cases, let me quickly do one more thing here. Actually, there are 3 counts going over here, so I won't be discussing every single one of them. But what I'll do is I'll give you a conclusive outlook with the second count. Yeah, so what's really happening is if we have the 3 under continuation or complete, whatever is the case here, so we should be heading on for a 4th wave, right? So the thing is that 4th wave, if it's complete here, then we should see a straight up movement, right? So that's the case here. 4th could be considered complete, and the second outlook is that the 4th can go as low as 18,592, right? So keep in mind, if the market is in a strong uptrend, it will generally not go to the lower target, which is this one. So hence, if this upward movement or hypothesis one, which is the bullish one, is being followed, then we would like very much for the market to take out the high without going any further lower in the next session, right? So that's one of the important features or price action outlook I'll be interested in checking out on this chart. As I said, I'll repeat again, I am interested in seeing this market going higher without taking out the low, right? Without taking out the low means without taking out this last low around 18,633 level, right? So if it goes straight up, that's our sign of strength, right? So based on that, you can formulate your trading plan or trading strategies. And because it is heading into unknown or uncharted territories, I can project some targets. Not really necessary, but the simplistic view will be that we take the length of wave 1 and we then expect that this market might go 177 points higher from this last low. So that can take this market to, again, roughly speaking, around 18,811 or higher levels. So anyways, not much interested in the targets. There are many ways to figure them out. We can also draw the trend line. If you are very seriously interested in targets, the trend lines will be like this. And the upper part of this trend line or the upper channel line will be your suggested upside target. So that's our take on Nifty or the bullish setup for Nifty. So if you guys have any doubts, you can post them in the comment section, or we move on to the next chart, which will be the chart of BTC. Right. Also, if you have not thus far hit the like button, kindly do so on YouTube, as well as TradingView has this rocket button. So definitely hit it if you have not already. That will help the TradingView algorithm as well as the YouTube algorithm figure out that this content was helpful to you, and in that way it will also promote the content to other traders. So now let's head over to the chart of BTC over here. Okay, let me see here. Let it load it up. So in this chart of BTC, the count we are following for so many days is we are expecting this leg to be an A wave and this wave to be a flat correction for B wave. And I seem to have gotten a comment on YouTube channel by somebody who did not care to check these levels, and he was suggesting that or the person was suggesting that this count is wrong and whatnot. So I'll just like to point out to you guys that I've been doing this for many years. As I pointed out, 7+ years, 6 years, I have a track record of 80% plus accuracy. So when I come here and say something, I'm not just doing it without proper analysis. So if you have any doubts, first check them at your end instead of posting and trying to be a hero. So anyways, by the way, just because I'm showing it, I'll just like to quickly point out my track record has stayed above industry standards for 6 years plus. It has remained 80% plus, as you can see, or anybody can see by going to my website 50eyes.com/forecast-accuracy. And you can check any of the analysis, all the videos and timestamps and everything is listed. So 2020, you can see 88.52 and 2021, 82.22. We have not yet compiled for 2022, but 6 years is itself a legacy, I would say. So anywho's, the comment or the doubt this person had was that he did not care to check the level this wave B has gone to and was saying that this has gone to much more than 161.8. So for that reason, I'll just like to quickly point out this is a log chart. And as you can see, it has not even gone to 138.2. So keep in mind, you need to check things before you open your mouth, right? And analysis that I do is top-notch quality, right? To whoever that guy was, next time draw your level. So with that, let's now head over to our BTC count. And as you can see over here on screen, this was, as I said, was our wave A. This was our wave B. And this is what we expect to be the leg down for wave C, right? So as I've said so many times, we are not interested in any longs on this counter as long as this market does not cross the high of 21,111 something, roughly speaking. You can check this high level at your chart, right? And the reason for that is that because this trend is still bearish. If you look at it, A down and then B up and then C down, so it is still bearish. So any longs, we need to have some evidence. So that will be the quick outlook again. We are expecting a flat correction here, and there are no current evidences for going longs. I have already pointed out the long setup in so many webinars, and that will be my take on BTC here. Hello, Olive Smith. So yeah, guys, this will be my take on all these charts. These are all the charts that we discuss. And if you have any doubts on BTC or Nifty, S&P, Gold, Crude, EURJPY, USDJPY, EURCAD, EURUSD, or any of the charts we discussed, you can just post them in the comment section. I'll wait for a few seconds. Hello, yes, I'm into stocks. So currently, I'm not really covering any stocks. The reason is that these webinars already take up about an hour of my time, and then I will have to draw the timestamps again if I cover something outside of what I'm cover. Currently, I just copy paste the name of all the things we are doing and just put the new times ahead of it. Right. So if the participation grows in these webinars, I will consider them from the coming days. And for those of you who are new to these webinars, keep in mind these webinars are conducted on weekdays, Monday, Wednesday, and Friday of every week at 2 p.m. GMT. We conduct these webinars. And as I said, once more people start joining in, more participation starts to come in, I will consider taking them bigger than 1 hour and covering more markets. But until then, I believe these 7-8 markets which we cover are more than enough. If you can just trade them, that's more than enough opportunities. And we have been pretty good at tracking what you call gold. We were able to catch the up move, right? And crude, we were able to catch the down move. And Euro USD, Euro USD, we were able to catch the up move. So as you can hear me just now, and Nifty, we were able to catch the up move. So 1, 2, 3, 4, 4 trades we had just from the last 2 webinars. That's way too many if you ask me. If you can take these opportunities, that's more than enough for your money, no matter how big of an account you're trading. So yeah, join me in the next webinars, guys. As I've said so many times, join them live and keep the comments active. Hit the like button on YouTube. If you are on TradingView, hit the rocket button. Okay, that's the way the algorithms will know that the content was useful, and it will be pushed higher in the rankings. Which stock is high today? So anyways, I don't seem to be seeing any further comments. Okay, Dinch is saying thank you. Well, nice of you to be here. That's about it from me, guys, and I'll see you in the next webinar. Bye.